Welcome back to Money Talks with Adia. Today, we're diving into a topic that's reshaping the financial landscape, the metaverse. Whether you're a seasoned investor or just curious about where the future of finance is headed, understanding the metaverse and its financial implications is becoming increasingly important. So let's explore this digital frontier together. The metaverse represents a persistent, immersive digital realm where users can interact with each other and digital assets in real time. Think of it as the next evolution of the internet. Instead of just viewing content, you're stepping inside a three-dimensional world where you can work, play, socialize, and yes, manage your finances. While the concept has existed for decades in science fiction, today's technology is finally catching up to the vision. Platforms like Meta's Horizon Worlds, Decentraland, and The Sandbox are creating vibrant virtual economies where users don't just visit, they live, work, and invest. In December 2023, Decentraland hosted a virtual finance summit where major banks like JP Morgan and HSBC participated through virtual branches, allowing users to learn about investment opportunities and even apply for virtual financial services that linked to real-world accounts. What makes many of these platforms revolutionary is their decentralized nature. Unlike traditional online spaces owned by corporations, decentralized metaverse platforms run on blockchain technology, giving users unprecedented ownership and control over their digital experiences and assets. The financial ecosystem within the metaverse is expanding rapidly, with several key developments. Virtual banks and decentralized finance, or DeFi platforms, are establishing themselves as key players in the metaverse economy. Adia, which was launched back in 2021, combines gaming with DeFi mechanics, allowing players to stake cryptocurrency through these cute, ghost-like avatars. By the middle of 2024, the platform had facilitated over $500 million in lending transactions, really showing how finance can be gamified in the metaverse. Similarly, SushiSwap has created virtual restaurants in the Sandbox, where users can swap tokens and provide liquidity while engaging in a restaurant-themed experience, rather than just interacting with a traditional exchange interface. The benefits of these metaverse financial applications include, well, a few key things. Accessibility, with financial services available 24/7 from anywhere with internet access. Reduced fees, since lower operational costs translate to cheaper services. Transparency, because blockchain-based systems allow anyone to verify transactions. And finally, immersive user experiences, where complex financial concepts become more intuitive through visualization. Cryptocurrencies serve as the native currency for most metaverse economies, enabling seamless transactions across virtual borders. Meanwhile, non-fungible tokens, or NFTs, have really revolutionized digital ownership. So, in October 2023, luxury brand Gucci partnered with The Sandbox to sell these limited edition virtual handbags as NFTs. These digital assets not only granted owners exclusive access to Gucci events in the metaverse, but they also included discounts at physical Gucci stores, which really helped bridge the gap between virtual and physical economies. The integration of cryptocurrencies and NFTs has, honestly, created entirely new asset classes and investment opportunities. For example, virtual land in premium locations within metaverse platforms has appreciated a lot, with some parcels in Decentraland selling for millions of dollars in 2023 and 2024. The rise of metaverse finance is, challenging conventional financial systems in several ways. Traditional banks are facing competition from native metaverse financial service providers that operate without physical infrastructure costs. In response, forward-thinking institutions are establishing their own presence. In March 2024, HSBC expanded its virtual banking services in the Sandbox, offering financial education, virtual credit cards linked to real accounts, and investment services focused on metaverse-related assets. This hybrid approach allows established players to maintain relevance in evolving digital economies. Smart contracts. Self-executing agreements with terms written in code are automating financial processes that previously required intermediaries. Within the metaverse, smart contracts handle everything from property transfers to insurance claims. Etherisk, a decentralized insurance protocol, launched metaverse insurance products in early 2024 that automatically compensate virtual business owners if predefined conditions are met, such as service outages or cyber attacks on their virtual storefronts. Perhaps most significantly, the metaverse is opening financial systems to previously excluded populations. In the Philippines, play-to-earn metaverse games like Axie Infinity enabled thousands of unbanked individuals to earn income during the pandemic. By 2024, similar platforms had expanded across Southeast Asia and Africa, providing financial opportunities to users without requiring traditional banking relationships. So, as with any emerging technology, Metaverse Finance presents both some promising opportunities and, well, significant challenges. Investment diversification is becoming more interesting. Virtual real estate, digital collectibles, and metaverse tokens are now representing new asset classes for portfolio diversification. And tokenized securities are also on the rise. Traditional investments like stocks and bonds are being tokenized for trading in the metaverse, which is making fractional ownership a lot more accessible. Back in September 2023, Upland, which is a property trading metaverse platform, actually partnered with Securitize to offer tokenized real estate investment trusts, or REITs. These new REITs blend virtual and physical property investments, allowing users to build diversified portfolios across both realms. So, the metaverse economy is actually creating jobs like virtual architects, NFT curators, and metaverse financial advisors. It's pretty fascinating to see how these new roles are emerging, But despite all these opportunities, there are still several challenges that really need to be addressed. One big concern is security. Virtual assets face hacking risks, and honestly, they're pretty vulnerable to different kinds of exploits. So, in August 2023, a major NFT marketplace in the metaverse experienced a security breach which resulted in more than $18 million in stolen assets. This incident really highlights, the need for more robust security protocols moving forward. When it comes to regulatory uncertainty, governments around the world are still figuring out how to regulate metaverse activities, and that, honestly, creates a lot of compliance challenges. Volatility is also a big issue. Metaverse-related assets can experience some pretty extreme price fluctuations. And then there's the digital divide. Access to the technology needed for meaningful participation is still, unfortunately, pretty unequal. Looking ahead, we can expect to see more and more convergence between traditional finance and metaverse finance. Major financial institutions will probably keep establishing their presence, and regulators are likely to develop frameworks that are specific to these virtual economies. Cross-platform financial services will likely emerge too, letting users maintain their assets across different metaverse environments. And as virtual and augmented reality technologies keep improving, the line between physical and digital finance is just going to get even blurrier. Investment firms like Grayscale launched Metaverse-Focused ETFs in 2023 and 2024, allowing traditional investors to gain exposure to this emerging sector through familiar investment vehicles. The metaverse represents not just a new technology, but honestly a fundamental shift in how we conceptualize and interact with financial systems. By embracing decentralization, programmable money, and immersive experiences, Metaverse Finance offers solutions to long-standing problems in traditional systems, while also creating entirely new possibilities. Whether you're looking to diversify your investments, explore new career opportunities, or just want to understand where finance is headed, the metaverse definitely deserves your attention. The financial landscape is evolving rapidly, and those who understand these changes will be best positioned to benefit. For folks interested in exploring further, I recommend checking out platforms like Decentraland or The Sandbox to experience metaverse finance firsthand. Start small, learn the ecosystem, and consider how these emerging technologies might fit into your broader financial strategy. Thank you for joining me today on Money Talks with Adia. If you found this valuable, please like, subscribe, and share with others who might benefit. Drop your questions about metaverse finance in the comments below, and I'll see you in the next video. Before we wrap up, let's take a look at the latest research and expert opinions on how the metaverse is reshaping finance. According to a 2024 report by Deloitte, global investment in metaverse financial infrastructure has surged by over 40% year-on-year, signaling strong institutional interest. Market data from Statista projects the metaverse economy could reach $800 billion by 2028, with financial services making up a significant portion of this growth. Industry analysts highlight several key trends: the rapid adoption of decentralized finance protocols, increasing integration of digital assets like stablecoins and NFTs, and the emergence of virtual banks offering seamless cross-border transactions. Recent academic studies from MIT and Oxford underscore the potential for the metaverse to drive financial inclusion, particularly in underserved regions, through low-cost digital banking and microfinance solutions. However, experts also warn about persistent challenges. Security vulnerabilities, regulatory uncertainty, and the digital divide remain top concerns. Notably, a 2024 survey by Accenture found that 62% of financial executives view cybersecurity as the biggest obstacle to mainstream adoption. On the opportunity side, analysts point to the rise of tokenized real estate, fractionalized investments, and new career paths in virtual financial advisory and compliance. To navigate this evolving landscape, experts recommend staying informed about regulatory updates, diversifying digital asset holdings, and prioritizing cybersecurity best practices. As the metaverse continues to evolve, staying updated with the latest research and expert guidance will be key to making informed decisions and unlocking the full potential of metaverse finance.